Back, YouTubers. I am here with Kaylin and Sam as always. Brandon is down in Florida for work, so we're not going to have him this week, but hope he's having fun at the racetrack.
Making 30
Um,
back, $30 or so here and there.
I think he won twice already, bastard.
Mhm.
But yeah, this week I figured we're going to start off by talking a little bit about the markets, the S&P, Bitcoin, and then we're going to talk about maybe the psychological factor of how to deal with it. Because I've been getting messages all week, and I think it's good that we touch on that a little bit more. And then we'll just talk quickly about maybe some trades, our assessment of some charts, and then just touch on this little bet that I did. So with that, let's go straight to the markets. Ken, what do you want to look at first, Bitcoin or S&P?
Let's take a look at Bitcoin because I know even today it's down quite a bit again, right? It's kind of moving like crazy lately.
Oh shit!
Yeah, let's see.
Oh man! All right, so
There's,
that was when was the 19th? Is that Wednesday? The big sell-off?
yeah,
Yeah, so that's the big sell-off. Um,
yeah, and
and
I've called dead bottom within like $200 and I didn't take the trade.
you did. I remember. I woke up late that day. To a message from you. It was like, oh, it's gonna go to 29K. I look at the charts. I'm like, holy shit! I hope you bought that.
Yeah, I was at like 38,000. I was like, we're going to 29. And then it went to, what did it bottom at? Like 28.7 or something like that.
This is the average. It took the average, so it could
Oh,
be lower or higher on other charts, but it's 29.6 on this one. So this is just the average.
oh, okay. Yeah. So the one I was looking at was the Binance one, and it went down to
Oh yeah.
29. What did it drop to? Or 28,715 ish, it looks like was the bottom. And then it bounced straight back up to like 42.
Oh, is that the Binance futures chart?
Yeah, that's the one I usually watch.
I'm telling you. So this is why I stopped trading futures on Binance. That thing moves, man, because I had spot orders for 29,000 plus, and it
Oh, yeah.
missed. Binance spot didn't even get to 29,000. It turned around like 30,000 something. And then now you're telling me that the futures hit like my order. Like I'm still kind of mad right now.
Yeah, that was the one. That was what I always used to trade it on. So that's the only one I watch.
Yeah, but yeah, I just wanted to say like uh the outlook of Bitcoin. What do you see in the charts though? At least
Well,
the
like
formation of the last week.
yeah, like right now we're like pretty comfortably below the 200-day moving average, and like when was the last time we were below that? Was it 20? Was it like the dip at the beginning of when was it? 2020? Is that the
It's
last time
COVID.
we were?
It's
Yeah,
COVID.
yeah, you got them on there.
Yeah.
So I don't know, man. It's like we were saying. Like I think a lot of people are just like I think a lot of people probably did get trapped at the top because it kind of sat at the top, around 50 to 60,000 bucks for quite some time, and I think a lot of people probably started to feel comfortable because in that time was when all the institutions were buying, and Elon Musk bought just before that, and you keep hearing all these articles. So I think a lot of people kind of got stuck, and if they were investors, so to speak, then they probably would have gotten scared out on a dip like that because usually you're not looking for stuff that's that volatile. So could be a little bit of that. It could just be, the Bitcoin's just volatile in general. So it really depends kind of how you're in it. If you're trading it, if you're in it for the long haul, but it's kind of tricky to tell. I don't know where you think it's going to go next, but I think it's going to probably base here. Should bounce above the $30,000, $29,000 area for a little bit, and I think it's probably going to kind of keep testing that 200-day and see what happens there. We're kind of it looks like we're probably going to end up trending between a 200-day and 29-30 area probably for a little bit until we get our next move.
Yeah. So it's gonna be range bound, you're thinking, eh? Here.
I think so, yeah, because I don't see it like, I mean, after dropping almost straight down from like 40,000 all the way down to like 29,000, or sorry, like 50,000 all the way down to 29,000. I don't think it's just going to rip right through that bottom again. I could be wrong, but I bet you it's probably going to kind of bounce around through there for a bit. And if it starts bouncing down, then we're likely going to end up going down, I would say maybe as low as like 16,000, really.
Oh yeah, you were saying that earlier, right? You saw
Yeah.
16,000 as support somewhere.
Yeah. Like again, I'm looking at the Binance futures right now, but like I think probably, yeah, like 16.5 maybe is kind of the next area I'd be looking at to buy if it breaks hard below that 30,000 area.
There you go. I see it. Yeah, 16.1, 16.2. Yeah, that's not a bad area.
Yeah.
Looks like it was a top for the last bull run,
Oh, is it?
and then well, not the top, but it was like once it sold off and it came back up, that's exactly where it was rejected,
Yeah,
16,288.
yeah. See that? See when it tops and you get that tiny bit of consolidation right by the peak there in
Yeah,
2018?
yeah,
That's the area of interest. It's usually not the very, very peak on those kind of setups.
yeah, right. You're right.
If you
So
yeah,
what
right,
I've
yeah, that little consolidation, that's where you're gonna see support. You won't really see support right at the peak.
Yeah, and it looks like we tested that area when we first broke out back in, what was it, December, right there.
Yeah.
There's a little wick that just came down. We tested it. The market just wanted to confirm.
Yeah, because that little wick above, that's usually just a whole bunch of money flow in and out in panic. And then that first little bounce is where you get your first little support where guys are getting into their heavier positions.
Yeah, yeah. So for those that don't know, this is the 2017, 2018 sell off. This was the peak, and then this was the long winter.
That was when I started trading, just August of 2017.
I do want to point out something that's very curious and interesting though, because I think a lot of people think the markets is just some weird kind of casino. They certainly treat it that way with their money, but like there's actually a lot of bigger factors at play. Like this looks like it's just a random top that happened out of nowhere. Maybe it hit 20K, people sold off, but people forget the stock market was down this period during this period as well. 20 December 2018. This was the beginning. The February area was when the bond market had the first tantrum post financial crisis. So the bond market was doing exactly what it's doing right now, and it caused both the Bitcoin and the stock markets to dip. So I just want people to realize like these things aren't random. There's a cause. There's a cause.
Yeah. Yeah, if you look at it like that, like it just looks like what is that in the 1 week? Yeah, the 1 week. It just looks like we really had never had any support when we got out over 20. Like
Yep.
there's like
Nothing.
that's what I mean. Like in that, that $30,000 area, that's a little bit of support, but there's really nothing until we get back down into that range, which isn't necessarily a bad thing because that should support pretty nicely.
Yeah.
It just there was so much excitement that it just blew past so fast. Like that's why we always say it's a good thing. Like if Bitcoin had broken out above that $20,000 area and stayed there for several more weeks and bounced along and then trended higher, you wouldn't get these kind of big pullbacks.
Yeah. And it's actually funny you mentioned that. I remember I shared this one in the chat. I was just looking at that the other day and I thought it was really curious because Bitcoin actually has a history of breaking out and not retesting. I do that wrong. Has a history of breaking out and not retesting. How did I draw that last time? Was it this way? Yeah, there you go. 32%. So this was the original 20 2011 to
Mhm.
2013 bull run. It broke out and it retested exactly 32% above its previous high. So it never touched the breakout area. And then it did the same thing here when it broke out in 2017. Whoops, let me try that. Bear with me, people. Yeah, so there you go. It broke out in 2017 and it did like a 30 something. Oh no, it should be 27. There you go. Yeah, so let me zoom in there. So, right, it broke out in the 2016, 2017 bull market. And again, it retested 30% or 20 something percent above. And it had this gap there. And then what I found interesting this time was that we're actually testing the gap now, I think. Why do I keep choosing this tool? I keep choosing the channel tool. There we go. So there you go. So I thought that was interesting. Each time we break out from previous all-time highs, we stop short about 30% and then
Hmm.
continue on. And the same thing with the 2019, and then now look at us.
Yeah.
So, the past is not an indicator of the future, but it's also something not to ignore because it has a history of not retesting its all-time highs
Yeah,
after
I would
breakout.
say, I would say it definitely is an indicator of the future. That's why they always say there's a saying that says whenever you're trading, look left
Yeah,
because
yeah,
stocks and patterns and charts, like each individual chart and each individual stock tends to have its own kind of personality, and they tend to repeat themselves quite frequently.
yeah. I agree. And even look at so I've been one of the earliest people to call that our current cycle is actually an analog to the 2013 cycle, and it's nothing like the previous one in the 2017. And if you look at the 2013 cycle, when it broke out, it had two tops. In 2017, it was just one straight arrow up, but it had two tops in 2013, and we topped on the RSI as well, right? And that's when they had the giant pullback, and they went like for a massive run again towards the end of the year to November. And I'm just wondering the same thing's going to happen now because this is an intermediate top. Again, we topped on the RSI. We're retesting the 30% above the previous high. And then I'm wondering if we just go now.
Yeah, it'd be interesting to see what happens.
Yeah.
That looks like it's just like it almost like to me it almost looks like too clean to the point where it needs to do something a little bit different.
So, yes. So I think the one thing we've touched on before, but we haven't talked about a lot is like once something is known, once a pattern is known, it stops being useful. And like once everybody's looking at a specific number, it stops being true, right?
Right.
So you're right. I think if everybody's looking at this,
I think that really depends on what you're playing and what you're looking at though, because like think of if you think about something that's like a long-term investment, like think about you're buying like a big company, like a good company, or just say the S&P index, like you're buying the S&P index, right? So most people that are buying that are going to be investors that are in it for the long haul, right? So if they're looking, like they don't really care exactly when they're getting in, and that I would argue that that's probably most of the money that's going into the S&P every day. People
yeah,
that are buying it, holding it for a long term, right? So even if you're seeing those levels, I don't think that it would really matter that much if they broke or anything like that. I don't think it would cause some kind of big panic. But I would say that that probably is true for something that's being like something that's more tradable per se, like something that's like like something. But I can't tell if Bitcoin at this point is tradable or if it's investable. Like which who holds more of the dollar value.
right. That's a really good point, actually. I think a lot of people who invest in the S&P 500 don't even know that they are. It's through like a pension or like some kind of program.
Yeah, they probably don't even know when they're buying in. Like their funds are just doing it for them, or yeah, like you said, an RSP or whatever. Because like if you're trading, like if you're looking at small caps and stuff like I trade, then that does kind of wage true to a certain degree. Like if you have something that everybody knows, then it kind of becomes a little bit invalid. But the thing with small caps is there's usually so much new money coming in that the same patterns that worked 20 years ago still really work today. Because like it's like they say there's a 95% failure rate or whatever it is. So you get those 5% of guys who can actually profit off the small caps, off the volatility. And then every single week there's just tons and tons more people coming in that trade for 3 months and then they give up, and then they trade for a few months, then they give up. So like that flow never really stops. So a lot of people know the same patterns, and the same patterns still work that worked 20 years ago because you're always taking money from the same group of people. They're just newer generations.
You know what? That's a good point. You're like, you guys are like those pros that play at the casinos, that play poker at the casinos. Like, you get a table of like, I don't know, like 9 people at the table, but like 6 of them are pros and only 3 of them are the profit. Like, the new fish shows up at the table. They don't know what the fuck is going on. The pros are just like, thanks for
Yeah,
lunch.
take their money. Like, this is easy. And then they come in the next day and there's a new guy again, and you just keep doing the same thing, right? But that's kind of a big thing to think about though, is right? Like is who's in this thing? Like is it right now? I would argue that Bitcoin probably a huge percentage of it. I don't know how much of the whole float, but probably a really large percentage of it is new, call it dumb money, right? People that are just jumping on the hype, they're all excited and they just buy in, and then that's when you get panicked, right? Because they don't know they bought this thing at $50,000 and that drops down to 40, and they're looking at their account, they're going, oh my god, I just lost $10,000, and they just freak out and they sell it, right? Whereas everybody who's an investor, they're just like, whatever, I'm not selling this thing for 30 years. Who cares what it does right now? So
Right.
depending how much of that is on each side of the coin has a huge impact on how it's going to trade.
Yeah, I'm just gonna pull up Glassnode. So I pay for data. So here's one thing about Bitcoin. People, if some uninformed authorities are like, oh, it's good for like the black market, it's anonymous. I'm like, bullshit, it's anonymous. Look at all the data that I got on Bitcoin. I know active addresses, I know the amounts of the active addresses. You could track every trend. That's the point of a blockchain. It's auditable, right? And so I
Mhm.
just wanted to show real quick the addresses. Is this one? Yes. So let's look at 3 months. So it looks like retail bought the top in April and they started selling. And
Okay.
then and it's retail's actually starting to buy now. It looked like it bottomed middle of May and retail's actually starting to pick up. So this is addresses. So this is non-zero balances. So this is just total amount of addresses with some value in it. This one's 0.01 Bitcoin. So this is like, I don't know, like $100, a couple $100 for the
Mhm.
Bitcoin. These guys, these accounts are going up. Um, one Bitcoin accounts are still going down.
Yeah.
10 bottomed and it started to accumulate. Well, those with 100 straight down. Those over 1,000 started picking up May 18th, so they're up. So they're buying this dip with those with 1,000, and
Right.
10,000's up. So 10,000's up.
Okay. Yeah,
So
that makes perfect sense then, because all the guys that have no money in their account, they all bought the top because they see it spiking and they get excited, and everybody, as you go lower and lower in that, the people who have more and more and more money, you see that chart getting steeper and steeper because they're like, I'm not buying the top, I'm waiting for a pullback.
yeah, and the way I'm looking at the identity of these holders is like, I think those with 100 Bitcoin, you're in like the tens of millions. I think these are like high net worth individuals, maybe some trading firms or traders, and so it makes sense that they would dump because they're trying to time the market. But
Mhm.
those with 1,000 and 10,000, these are like firms, and these are
Yeah.
probably those investors we're talking about. So that's why they just want to accumulate. So that's what I'm thinking there. And here's the other thing. So Purpose ETF, that was the first Canadian ETF, Bitcoin ETF. They have about $1 billion. Well, they had $1 billion of assets under management. They started buying on the 19th. So despite Bitcoin price dropping from 42,000 to 33, their fund actually has had inflows for the last 3 trading days.
Mm.
So look at their assets under management went up. So they bottomed at 17,600 something Bitcoin. They're up to 18,300. So they're buying. And so the people who are investing in ETFs are more likely to be people that can't invest in Bitcoin directly. So I'm thinking high net worth individuals and other maybe kind of firms, hedge funds, things like that, maybe
Mm.
family offices, right? And so it gives me more vote of confidence to say that Wall Street is not disinterested in Bitcoin. I think they just want it at a better price.
Yeah. I think a lot of the people that are buying the ETFs too are just people that don't really understand or don't trust like buying Bitcoin on some other exchange,
And I
right?
totally get that. Yeah. Oh,
Yeah,
100%.
because I know a lot of people that I've talked to who are more like investors. They're like, well, how do I do my taxes on it? How do I do this? Like, is it safe? Is it secure? I keep hearing these things get shut down here and there. So like, all right, well, I'll just use my normal broker and I can buy an ETF. Then I know I can sell it when I need to. I know my taxes are all going to be reported properly. Like, I think that's a huge thing for people when it comes to the ETFs.
Yeah, that's a super good point because you get that counterparty risk. Like I personally have been on account exchanges, 3 of them that have shut down. Luckily, only 2 of them had any assets on them, and those 2 were like shit coins, so they would have been worth nothing today anyway.
Yeah, yeah.
So, but so this is SOPR, well, adjusted SOPR. So SOPR is spin output profit ratio. So this is a metric that looks at all the Bitcoin wallets and it compares the dates at which they were created, so they know the price based on that date, and then they know the date in which the wallet was liquidated. So basically, they assume it was a sell.
Mm,
And so anything below 1 means it was liquidated at a loss based on the date that it was created.
okay.
And since Monday of last week, Bitcoins that were sold since Monday of last week on average have been sold at a loss.
Mm.
And the last time we saw that occur was basically COVID.
Yeah, so
And so,
that just tells me that's panic then.
yeah, so this
Anybody
is
anybody who sells a loss on that dump is panicking.
yeah, yeah, they're irrationally selling, and called it like middle of the week. I said this looks like capitulation, right?
Mhm.
When people, you don't sell when you still have hope. You don't sell at a loss when you still have hope. You sell you sell at a loss when you have no hope.
Yeah, exactly. Yeah, exactly. Yeah. Well, it's like 2020, right? Like as long as you're in good stocks, you can relax. Like all the stuff that I've bought for long term, like a lot of it's gone down and some of it's up, and it doesn't stress me out in the slightest because I bought that stuff for like a decade hold minimum, and I know they're good companies, so I'm not concerned about it.
Yeah, and I think I'm pretty sure we talked about this before. I was like, especially as an investor, like it really helps you through these times if you had the right reason to get into your position, right? If you
Mhm.
got into a stock but you did your homework, wherever the price is, you did your homework, you're like, this thing is a winner. It's going to be a little bit easier to hold on to it versus you bought because your uncle told you to buy or your
Yeah.
cousin.
Yeah, yeah, that's all. I always hated that too, man. Like I got out of that. I didn't do it for the longest time. Like I always buy stuff for like even just in like in short term trading and stuff. Like people would say like, oh, like this thing's a a good short or a good buy or whatever. And like I just noticed that like even if it was a good setup, even if it was a setup I could kind of recognize, if I didn't know everything about it myself, I would either sell for a small loss or I would just leave like huge amounts of profits on the table. Because I'm
Yeah.
like, I don't know why I'm in this thing. Somebody just told me to get in this thing and now it's going down. And I'm like, do I research this? Like, what, you start panicking because you don't know why the hell you're in this stock. It's a terrible feeling.
Terrible feeling, and it strains friendships. Right now, you're looking at the guy that suggested it to you, like, you asshole.
Yeah. Yeah, exactly. Well, it's like I was
And
just
like,
telling you for the podcast, like we were talking about, like on Twitter, like all these people that get in these big groups, and you have like one person says something on Twitter, and everybody's all excited about a stock, and then 1,000 people start saying the same thing, and that original bit of information could have been false or poor information, but now it's just gone down the pipeline so many times that you're looking there and you're thinking, oh wow, this guy's saying, and everybody's saying, and there's 1,000 likes, and like, okay, well, this must be true. And then you make a decision based on that, and you either lose money or you don't make the money you think you're going to. And I was just saying how I've never really personally been burned by buying into something because I never like the idea of buying into something like short term like that based on what other people are saying. But I've been burned a couple times just on missed opportunity. Like I was just telling you, I was at home on Friday, so I was trading like during the day, and I had one of the chat rooms I was looking at, and someone said like, "Oh, like someone like so and so has bought this thing long," and they're like I know who they are. They're a really good swing trader, and like it was one of my things. I had short orders at already, so I had my shorts and my covers in, and I'm like reading, and everyone's it gets this whole string going where it's like, "Oh, if so and so is buying this thing, like I'm not shorting that anymore." Like, "Oh yeah, they're always right. Like I'm not going to short this," and so I'm sitting there, I'm like, "Ah, like well, fuck. Like should I? Maybe I'll take my orders off." So I took my orders off, and of course I like nailed the top within a couple pennies, and it would have been like a quick 5% move or whatever in 2 minutes. And then it did rip higher. So like overall, this person was right, but that wasn't my trade. Like my trade was like that quick in and out, quick snap, and then we're done, which worked out perfectly. So everybody's saying that this person was in it for like a week long swing trade, kind of screwed up my day trade. And I was like, what? Why did I do that? I've done that a couple times over the past month. So like coming into Friday now, like I even saw a couple things where people said similar stuff, and I was like, I don't care. Like people are like, oh, don't do this. That's a terrible idea. I was like, well, I got my plan, so I'm good. And like some of the ones that people said don't touch, I shorted and I made money on. So like you gotta. It's just it's the same old thing where it's like, yeah, stick to your plan. That's all great, but I think the bottom line is, and this is something that it's you got to learn. It takes time to learn, but the bottom line is you have to trust yourself, and you have to know why you're in the trade and have your own plan, right? Otherwise, if you don't, you're just going to be too stressed in the trade, and the shorter the time frame, the higher that stress is. So if you're doing stuff on a really short time frame, you have to know everything. You have to know exactly where you're getting in, exactly where you're getting out, exactly what to look for if something goes wrong, because all that stuff happens in seconds.
yeah, I think one there's probably several intolerable feelings in trading, but like one of the worst ones is being in a position and you being in that position because you listen to somebody else or you were influenced by some outside piece of information, right? Just the other day, so like it's weird. Whenever prices of anything crash, everyone screams manipulation. They don't say it, it goes up 20%. They're like, nope, manipulated, nope. But when it goes down 20%, they're like, ah, right?
Yeah.
So when Bitcoin dropped on Wednesday, I started seeing a whole bunch of shit about the Wyckoff distribution, this and that, like a whole bunch of people, they want the price down, right? And then right that same day, my other crypto chat, like this is a class of 2017, so they should know better. Right. But this guy shared this thing. He's like, oh, I'm this group, and there's this insider, he's leaking out this information saying that they want Bitcoin price at $25,000. So watch for 7 a.m. tomorrow, Bitcoin's going to go for a dip. Sure enough, 10 a.m. comes and it doesn't even move. Like,
Yeah.
imagine you traded based on that bullshit information,
Yeah.
right?
You can't. You can't. There's always going to be somebody who has a different idea. Like look at it this way. If you're going to take a trade, you could be shorting a trade, and someone else could be buying that trade long at the exact same time. But you could have two completely different outlooks. Let's take this for example. Let's say there's a guy who wants to swing something overnight, right? For whatever reason, he's going to swing it long. He's looking at the thing, and he's going to buy it today if it goes to new highs, because that's his thesis. He says, you know what? I've seen this pattern. This is my setup. If this thing goes to new highs today, then I know it's going to open higher tomorrow. Like that's my thesis. And then you have someone like me say, who's thinking, okay, if this thing goes to the high a day and it looks like it's struggling, I'm going to short it and I cover down at the next support line because I know if it's struggling at high a day and it's, this time of day, I know that pattern and I know it's going to come down, right? So
Yeah.
let's just say both of us post on Twitter at the same time. This other guy says, if this thing goes to high a day, I'm buying it. Like it's going to go higher. I've seen this pattern a million times. And then I post as well, like this thing's at high a day. It looks like it's struggling. I'm going in short. That's all you see on Twitter. You don't see what our actual plan is. You don't see what the long-term output is. So you have two people that are saying the exact same thing, and both of us could very well make money on that exact same stock. He could buy right where I short, and we could both make money, right? Because we both have different outlooks and different theses. But you don't see that whole breakdown on Twitter. That's why it's so important to really take all that with a grain of salt. I mean, people are posting news articles and stuff. That's fantastic. But if someone just says like, I'm not doing this here because I don't like it, then I would just say just straight up ignore that unless they give you a reason why, and you can look into the reasoning and see if it's going to affect your original thesis.
So I'm just looking for this infographic thing I want to talk about. But while I'm looking for that, we were talking earlier. You said there's a pattern that you were working on for months, and it played out this week. And I
Yeah.
just wanted to ask you, like, to kind of cover like the research you did to find the pattern and how you executed. Because I think a lot of people, I think once they're kind of used to maybe trading or investing, the next step that they're stuck at is like, well, how do I recognize something as actionable? What's my steps that do I take to find a trade?
So I think the biggest thing for anybody who's doing like actual like trading, like when I say trading, you're doing like intraday or swing trading over a few days or weeks or whatever. Obviously, the longer the time frame, the more you have to know about the actual company. But as far as just like the patterns and setups themselves, like you really want to just everybody says it's funny because our podcast is called Jack of All Trades, but you don't want to be a jack of all trades when it comes to actually trading, ironically. Like the best way to make money is just to be really good at one thing. And like I'm sure there's going to be people that can argue that say, oh well, if you only do one thing then you're vulnerable in this kind of market or this or whatever. I could say yeah to a certain, but realistically, like I've traded through several different types of markets, and the only thing I usually do is just change my profit targets, change kind of how I'm entering. The overall setups are still the same. So like basically, like I started short trading back in like December of 2020. So I've only been really like focused on shorting for, I don't know, was that 6 months or something now, 5, 6 months. Because before that, I was doing like all long trades because I just like I was trying to short small caps and I was just getting frustrated because I could never get shares. So I just like, all right, screw it. This is a couple of years ago. I'm just going to trade long. So I was trading long for a while, and like I always kind of was like having like decent plays here and there, but like the most volatile like stocks and stuff like that, I just always found I was getting burnt because like all the volatile ones are all like really junky companies, right? So most of the time the short is the better side to be on in my personal opinion. I know a lot of guys long them, but so it's kind of like, okay, well, over the winter, I had time off work and everything like that. I'm going to start like looking into shorting this stuff because, a lot of guys seem to do this. It seems like most of the guys that trade this stuff make most of their money on shorts. So I just started off, really small. I started off trading with like 10 shares, 20 shares, whatever. I actually paper traded for like 6 weeks, even though I was already a profitable long trader. I was like, I don't know how to short. So I'm going to paper trade for a while and kind of get a feel for this. And then really all you do is you just, you start big and you just work your way in, work your way in. So what I did at the start, and I would recommend anybody do this who's starting or learning any kind of trading patterns on any time frame, is just screenshot anything that looks interesting to you. So like on my computer, I have probably, I don't know, maybe 3,000 screenshots of charts that I've saved over the years. And basically what I'm doing is I'm looking for anything that looks exciting. Like I look at my scanner at the end of the day and I see a setup and it's got a big spike and then it tanks. I'm like, wow, that was a huge move. I'm just going to save this chart. I don't know what I'm looking at yet, but I'm just going to save it. And then, a month goes by and I have a whole bunch of them together. And then I'll take a Saturday and I pull them all aside and I look at every single one of them like, okay, what kind of similarities we got here? Go through them all and try and look at anything that's kind of correlating between them, like anything that I could pick up that's kind of similar. And then from there I say, okay, well, this group of them kind of does this group of them kind of did that. And then these ones over there, they just look kind of messy. And I start separating them into groups. So like from my couple hundred or whatever that I have, I've now separated them into say like 25 different folders of individual patterns that have some similarities. And then from those, I just break it down even further. So I'll start, that's when I start writing out like actually my playbook, I call it. I got that from Mike Belafar and his book, One Good Trade. Great read, by the way. Basically, I have a big Word document that I write out, and I write out, okay, like for this particular setup, like, and I put 10 bulletin points or whatever. I'm saying, if it does this, I'm looking for that, enter half size here. If it confirms, enter more. Cover targets are these. If it does this, get out, cut your losses there. If you get in and then it does this, then, go to this. And it's kind of like almost like a, what are they called? Like those tree charts or whatever, the flow diagrams.
Oh yeah,
It's like, yeah, so you start here, and then if it does this, you do these things, and then if it does this,
tree.
Yeah, and you just kind of like follow your way down. So like I have one particular setup, and there might be like 2 to 5 different variations of that setup. So like when I get into a stock, I can look, and I'll have that open, and then I'll say, okay, it's doing this, and I'll take a quick look at that, and I'll say, okay, it's supposed to do this now. Back, and it's still doing that, and so I'm like, okay, well, this is obviously becoming pretty viable. And the other thing that really helps with breaking them out like that, because again, like, I'm working full time, so I'm saving all these things at the end and just looking at them in hindsight, right? So the other thing that I notice is, okay, I have these, 20 some odd folders of these setups, and, it's been 3 months of this, and, in this folder, I have 5 charts saved. In this folder, I have 12. In this folder, I have 2. In this folder, I have 15. In this folder, I have 112. So I'm like, okay, let's focus on that one because that one seems to happen a lot, right? So then I put all my focus on the one that I'm seeing happening the most. And then from there, you do the same thing. You just get into it and just pick it apart, find out what's going on, look at it all different time frames. Like, I've been saving all them in say the 3-minute chart, and then I see something that I'm like, huh, and then I'll look at the 1-minute chart, and it's like, oh, okay, well, yeah, you can see that there now in the 1-minute chart, or like in the daily chart, or in the 5-minute chart, or whatever, right? Just look at all different time frames until you can eventually like pick everything apart and get it broken down into something that you just through and through works very well and is really good risk reward. And that's basically like last Friday when I took the day off work so I could trade from home. One thing I realized is I need more screens.
Oh my god.
So for those that don't know, I have 3 screens right now that are vertical. They're I think like 27-inch monitors or something. And then I have a laptop beside me that I keep my watch list open on and like my Word documents with my like trade plans. And then I have a little like mini screen. It's right here actually. I have this little like mini screen that I put right in front of me, and that's where I have the chat room open and stuff. So I have a TV downstairs, like a 45-inch TV. I'm going to hang above this, and then I'm getting another desk beside me so I can get 2 more monitors on it. Because I swear, I didn't have enough screen real estate, man. Like Friday was so busy, I had everything open on all my screens, and I'm sitting there and I'm like flipping back and forth, and I'm trying to like pull stuff up on my laptop on my other broker, and I was like, I need more real estate, man. So anyway, anyways, that's kind of a sidebar. But yeah, so basically like what I'm doing is I've broken this down so far that on Friday it was like I didn't make very much money on Friday. Like I mean, I made a couple bucks. I started with a losing trade, and then I had 3 winning trades after that. And my winning trades are always more than my losing trades, so everything went great. But like basically it was just like it was being able to sit there and finally watch all that stuff in real time was just such good confirmation on this particular setup that I've been working on, that it's like, okay, like seeing all this in real time. Like a lot of these trades I'm doing, I'll set the orders beforehand, so I'm not watching them at work, right? Like I get up at 4 and I set my orders. So it's just that extra level of confidence because seeing it in hindsight is very different than watching the order flow in real time, right? And watching all the shares and everything go through. So being able to actually watch it was just like a huge confidence booster, saying like, okay, like this setup I'm working on, this works, and it works really, really well, and it's hugely profitable. So that was kind of a nice thing to see on Friday. And as far as like all the different time frames that I was mentioning, I played around with all of them enough. So like I've gotten to the point now that when I set my orders for these things, basically I'm looking for I have the line chart, I have a 1-minute chart, and I have a 3-minute chart. So I get my levels off the line chart. I get my trend line breaks off of the 1-minute chart. So if it's going to reverse, I'll see that on the 1-minute chart first. And then I get basically, I like to call it my psychology off the 3-minute chart. So the 3-minute chart is where I can kind of see like what people are thinking and like what the general sentiment is. If people are getting stuffed out, if people are panicking, I get all that information off the 3-minute chart. So I'm basically like when I'm trading in real time off of some of these setups, the ones that I'm not just putting my fantasy orders out on, I'm looking at those 3 different charts at the same time. So if I have one stock, I got the line chart, the 1-minute chart, the 3-minute chart, the level 2, and the time and sales for that one stock. And then I have, 12 of those open on my computer.
Just so that our listeners know, like you're what you're doing is like day trading, basically almost scalping. Like you're trading within a really short time period, right?
Yeah, like
And like
usually like I don't know. I don't think any of my trades are really longer than maybe 10 minutes at the most. Like usually like 5 minutes, if
yeah,
that.
yeah, yeah. So I hope our listeners like realize like there's not just one. You're not just a trader. There's so many different ways to make money doing this. Like Kalen, and I'm jealous of it. He spends 10 minutes actually trading. Right? It's like the stress. You manage the stress, right?
Yeah.
Whereas like I'm in a swing, so once I'm in it, I'm in it. Like however long it's gonna be. That's it.
Yeah. I kind of like that portion where you can get in and out kind of quick, but like remember, like to be able to, have those 10-minute days or whatever, that's like, that's years to get to this point, and it's also still every night 2 to 3 hours every single night of the week to get ready for that next morning, and getting up at 4 a.m. to set my orders.
Yeah,
So like most of my trades that I do, I get up at 4 and I just set my orders, right? And then they'll just, they'll execute it. And if they execute, if they don't, they don't. Because I'm working, I can't be sitting there trading, right? I'm only actually actively trading if I'm at home. So it's more so like in the winter I do that because of my like the way my business works and stuff. But so that's the way that most of my trading goes. But again, like to be able to do that, I have to do all that prep work outside to be able to put those orders in comfortably and know that like I don't have to be watching this, but I know that if those orders get hit, they have, X percentage chance of working, and the return is going to be, 4 to 1 or 5 to 1 or whatever. So that's
yeah,
taken, that's been like, like I said, 3 hours every day of the week, and like usually, 5, 6 hours a day, Saturday, Sunday for the past 6 months to get to this point. And that's also with 3.5 years of just general trading experience beforehand. So I think
yeah.
it's really, I just really wanted to mention that because I'm reading another book about, it's a Canadian guy actually. His name's Andrew Aziz. It's called I think it's the Psychology of Trading or something like that. It's a really, really good book. But that's just one of the things that he kind of mentioned that I wanted to emphasize as well, is that, you see these traders with their Lamborghinis and, their houses, and they're saying, oh yeah, it's so easy. I just shorted here and I cover it there. And you look at the chart and it makes sense. But like, you might, that particular pattern might present itself and fail 9 times out of 10 because you don't know the background behind the stock. You don't know the float you're looking for. You don't know the news you're looking for. You don't know the short float you're looking for. There's all the other things that go into that, the history of the chart that makes that one particular setup work. So you might see that, on a day or on a weekly time frame or whatever, but if you see it in any other stock, it won't work. Like my patterns won't work on something that's a large float stock. Like I can't do this on the S&P. It doesn't work, right? So if I just show you that setup and then you try and do this on like a real company, for lack of a better term, it's probably not going to work. So it's just, that's just kind of really important to remember, is that, it's been a 4-year journey to get to this point, to the point where I can, quote unquote, only spend 2 hours, 3 hours a night to be able to throw those orders out and make money while I'm not watching the markets in 10 minutes.
Yeah, yeah. And I think you brought up something really interesting. I think people shouldn't look at a company or the market as some abstract thing. Like it's there's a lot of psychology behind it. Like you love studying the psychology behind this stuff, right?
Mm.
And I just wanted to say, like you're right. Different assets and different asset classes have different characteristics, and you got to think like who are the people playing this stuff or playing this asset? Because those are that's the mentality that you're playing against or you're playing with, right? So
Right.
like a small cap, it's going to have a different demographic breakdown than like an Apple, right?
Yeah. Well, that's why we always say, like it's like I don't want to fight against guys that know more than me. Like I don't work on Wall Street. I wasn't born into stock trading. Like Charlie Sheen and friggin' Wall Street isn't my dad. All this stuff. So I know, like I'm modest enough to know that I'm not as smart as those guys, and I don't have the kind of tools and information that those guys have. So those aren't the guys that I want to fight. So I don't want to be trading the S&P. I don't want to be, like I invest in it, but I don't want to be trading it. because I know that those guys are going to beat me. Like they have all the algorithmic programs that are in there. Like, during the day, there's just all institutions buying. Like none of the stuff that I know and that I've learned over the past 4 years is valid on those stocks. So like the people that I want to go to battle against are the people that were like me 3 years ago, the people that don't know what they're doing, right? They're just learning. Like those are the kind of guys I want to fight against because I have a good chance of winning, right? I don't want to
Yeah,
fight against guys that I don't have good odds of winning against.
you're right. Like, I don't think we talked about this on the show, but we hear it often when we're talking, when we're listening to other traders reading their books. It's like they call it the edge. You need an edge.
Yeah. And like everybody's is different. Like that's why like this book I'm reading now is really interesting because it's kind of like a combination of a bunch of different traders just kind of giving their inputs, and then Andrew kind of speaks to it, sort of thing. And like one guy was saying, he says I've just noticed that like I usually lose money in the morning, and like I seem to be really profitable between like 11 a.m. and like 1 to 2 p.m. and like everybody, that's kind of like general rule of thumb. Well, not a rule of thumb, but like most people say that like that are good. They're like, yeah, you make all your money in the morning and then you make all your money at the end of the day because in the middle of the day, things just kind of float around. There's not that many people trading. Like patterns aren't necessarily as valid. So that's just kind of always been the aura over that time period. And this guy's sitting there. He's like, I always do really well in the middle of the day, but I always lose money in the morning and I don't do very well in the afternoon. And he's like, is this bad? Like, should I be trying something else? And like, basically, long story short, they're saying like, no, it doesn't matter at all. Like, if anything, stop trading and don't even come to the markets until 11 o'clock and just focus on what you're good at. Like, if you're good at trading in that time period, then why do you need to bother trying to learn a different time period? It's not going to help you. It's just going to stress you out. Like, if you're doing it as a full-time job, then sure, come in, maybe paper trade in the morning because you're doing this as a career now, trading that one little window, and then paper trade in the morning, see if you can learn it, and then when 11 o'clock hits and it's your time to shine, switch over to your real account, trade your real money, and like then you can grow from there. But like most of the people in this book are people that are working full time, or people that have like had other careers. They're older and they've like retired semi or whatever, and they're trying to learn how to day trade at this point. So like they don't want to be risking a lot of money, and they're just trying to kind of find like where they fall. And everybody is different, right? Like even last year, like most of my stuff was in the afternoon. Like all the long trades I was doing were in the afternoon, and that was where I was most profitable. I lost money almost every time if I tried to do anything in the morning or swing anything, and it was just like I couldn't figure it out. I couldn't figure out what was going wrong. Like I was probably like not getting the right information or whatever, but that was just what was working for me. And then flip over to short trading, and my best time to make money is in the first half an hour of the day, and that's doing all the work before getting up at 4 and setting up those orders, which is something that I never thought I'd be doing. And that's I've just kind of through the transition of learning all these different things, that's sort of where I've just fallen into, because that works for my job and that works for my mentality. And now I found something that I'm actually consistently profitable on. So I haven't taken a long trade in months, and I have no interest in it because it's a whole nother thing now, and I've kind of ignored that.
Yeah, I literally went the opposite route as you did. My personal experience is like since last September, I started trading futures again. And then, but I was swing trading it. I might do one trade a week, maybe one trade every 2 weeks. And I noticed by January, February, I was trying to get into a position at least once a week. And by
Mm.
March, I was like, if I wasn't in something every day, I felt like a druggie that needed his fix.
Yeah,
And that's when I started losing a lot of money. Like I was wrong. I was always on the wrong side of the trade. And then
yeah,
so I think April, whenever we talked last about that period, I went through that little that little PTSD period. And then now I'm back. Like I'm now back in just like swing trading. I might like the most amount of trades I did in the last few weeks was literally I think Wednesday when Bitcoin crashed, because I set some sell orders to get more into cash, and I just set my buy orders really low based on my technicals, and I just kind of left it there. I'm like, if it hits, it hits. It doesn't hit, it doesn't hit. And sure enough, that day, like quite a few of my orders hit.
yeah. That's actually like it's funny that like the way that I trade, again, like being like working and stuff like that, that's become a lot easier for me on the days that I do have off where I can trade like in real time from home, is because I'm not paying attention to it. I just set my orders. it's taught me to be like, oh, okay, well, nothing hit, that's fine, shut it down, and we'll look again tonight, sort of thing. So like when I'm actually trading in real time, I have that same mentality, because I used to be like that all the time too, where it's like, I'm sitting there and I'm like, okay, everything's moving, and like looking at the chat room and everyone's like showing all these trades they made and everything's exciting, and it's like, oh, I just want to be in something. But like, you just got to remember to chill and just let the trades come to you, right? Because whatever my particular setup is, it only works if I can get in like right there. If I don't get in right there, it doesn't work.
Yeah,
So
it's like the ultimate FOMO test, eh? Getting in the markets, like you said, like you see everything's happening, so like shit, this is happening without me if you're not in a
yeah.
position. And then on a longer scale, even on the investing side, like, so I'll give you an example. I the only time I made a investment decision not based on my own choice was it was the wheat stocks in 2016. Because my best friend's into it, right? He smokes, he grows, like he knows that field, right? So he invested, and I couldn't stand that he was making a ton of money in the weeds. I'm like, this is my shit. I'm a trader. Like, so that I got into Aurora, and like I think I lost 2 grand within, like, I don't know, maybe like 8 months. I think I literally bought the top on that turd.
Yeah.
So so like that was so I learned that lesson. Like that was my only time where it's like, if I'm in a trade, it's because of it's my own independent decisions. If everybody else agrees, cool. If not, fuck you. Like, I'm gonna
Right.
die by the sword, right? If I go down, I'll go down, but it's my decision.
Yeah.
And then
Exactly.
but
It
then
makes
but then that I'm sorry.
Sorry, go on.
Oh no, I just wanted to say that that trade taught me, I think, one of I would say my top 3 biggest lessons. That not for the not listening to somebody, because I already knew that lesson. I just need to be get slapped. But the thing that I didn't know, that I knew afterwards, was the benefit of cutting losses. Because I was in the red for like 8 months, and I finally at one point I was like, should I cut it or not? And cutting the loss proved to me that, well, I cut the loss, I took the money, put it into a much more productive asset, and I got my losses way back, and like way more, right? And so the
Mm.
lesson for me is like, you gotta, sometimes you just have to bite the bullet. It's a loss, cut it, because there's still money there, and if you put it to something more productive, you'll get your loss back.
Yeah. And that's the thing too, is like, if you're actually actively trading, you're probably like, really good traders only win like 60% of the time. That risk reward is so important. Like if you think of somebody who's, making 100 trades, they're gonna lose 40 of those trades, right? But if you have even a 2-to-1, reward to risk ratio, you're gonna be making money. So that's why that's so important. And that's like, especially on the longer time frames, like you see people that, it goes below some support level or whatever. Maybe they don't even know what a support level is. Maybe they're just not sure. Like if you're not sure, just sell the stock, take the loss. You can literally get back in 1 second later for the price of commissions if you really wanted to. But once you're out, then you can sit back and say, okay, this is done. This sucks. Maybe take a walk, take a breather, take a day, whatever, how long this trade's going to be, and look at it again and really think things through. Think about what you want to do. If it spikes up, 5% the next day or whatever, if you're doing a swing trade, then if everything's still valid, you can say, okay, well, let's get back in and I'll risk here and I'm going to buy this much. And then you know what your risk is going to be, what your loss is potentially going to be, and like where you're going to sell it, right? That's the biggest thing, is that you can always get back in, and it's just the price of commissions. But when you're in the trade, you can't think. You're not going to look at anything rationally if you're in the trade and you're losing. You got to get out and just look at it again with clear head, and then make your decision based on that.
Yeah, I think people need to realize it's more of a battle of reprogramming your mind, your perspective, to see things differently. Because like, kind of on the other side of that, I think last August, towards the end of last summer, I had it was a similar experience with the wheat stocks, but it's a little bit different. So I sold Bitcoin. I sold some Bitcoin around 16,000, 15,000, whenever it peaked around that summer, and it dropped to 12, right? And it started going back up, and then I didn't buy around the 12 mark, and it started going past that I sold. And I started thinking in my head, well, let me wait for a pullback, because I don't want to sell something and then buy it back at a higher price, because that seems stupid. But then when it hit 20,000 or 19,000, I was like, holy shit, this thing's going to break out. Like, I trust my technicals. So I was like, even though there was a $3,000 gap between where I sold and where I might be buying in now, I bought in anyway. And
Mm.
19,000 to whatever, like in January, like, it basically did a double. So it's like, there's a whole other side of it too, right?
Yeah. Yeah, because something happened, right? Like you might have sold into a previous high and then it broke that high and it confirmed. So you just get right back in, right? But if you did, if you, it could have easily gotten rejected off that high and tanked back down. So selling into that high was the right move.
Yeah, it was the right move, but then like there's always the question of, I think it's just being stubborn. It's like I don't want to buy back. I don't want to pay more for something that I sold for less. It's like a weird, thing. And then
Yeah.
but I'm like getting past that obviously was hugely beneficial. So it's like it's just weird how it's a battle of psychology, trading.
Yeah. That's what everything is, man. That's why I'm so into it. Like I'm
Yeah.
like I spent years, learning the charts and learning what to look for and learning support and resistance and all this stuff. So I'm at a point now where I'm confident and I know how to trade and I know what to look for and I know how to trade the charts and all that kind of stuff. So the biggest thing for me to learn now that's going to improve my trading is my own head and my own mentality and like, because I can like I'm really good at looking at things objectively now. So like if I make a trade or something like that, I can look at it and say, okay, like I took profits too early, and then look at it, why was I feeling that way or whatever. And that's one of the biggest things that I try to work on is like when I get in, like when you're in this stuff and when you're learning these things and when you're setting your targets, it's like you've got to really understand yourself and you got to really be able to almost like talk to yourself as a coach basically. And like, if someone was standing over your shoulder teaching you how to do this and they had all your information and all your know-how and patterns that you knew worked and you had all that data, you're saying, no, I'm getting nervous, I want to sell here like because I'm a little bit in the red, or like I want to sell now because I'm a little bit in profits, or whatever the situation is. You need to have that, almost secondary personality that says, no, 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 hold on. Like if you were teaching someone else how to do this and they had all this information, you would say, no, why would you do that? It hasn't hit your stop loss. Your profit target's up here. The trade is still working. So why are we even having this conversation? Right?
I could have used that just so I was telling you the trade on Wednesday because I ate it down at like 96 cents and I sold at a buck 63 or 62. Even though I thought that $2 it would look like it wanted to go to $2, but I didn't sell because it hit my target. I sold because I looked at the percentage gain. I'm like, this is a huge percentage gain. So it's debatable whether or not that's a wrong decision because it's profit. And it was like 50 something plus percent, but at the same time, there is a mistake there. I think it's not sticking
Right.
to your guns, right?
Yeah. I think maybe we can even like I know Sam was asking us before the podcast about
Oh
sizing in.
yeah,
So
yeah. You
we
want
can
to touch
say
on that?
that. Yeah. So like yeah, like for me, like when I'm doing my trades, I'm usually entering them in like two or three shots, and I'm usually getting out in two or three, depending on the setup. Like if I'm live trading, like well, here let's back up a little bit. So all the orders that I'm presetting are almost always two or three entries because I'm trying to hit like a little range basically, and then I have all my stops are the same spot. So if I'm entering here, my stop is here. If I'm entering here, my stop is here. Like the stop is always the same. And then that way I know, before I go into the trade, I do the math. I'm like, okay, this is my max loss on this trade. Put all the orders out or whatever. I have my max daily loss, and I know, okay, if all these orders hit and all of them lose, I'm going to be at my max daily loss, and that's where I start. So the first thing I look at is how much I'm going to lose, and then as long as I'm okay with that, then the orders are going through. And then usually I'll exit in the same amount. So like if I have three to come in, because again I'll set a short or a stop loss and a profit taker. So I'll do that for three, and then like some of them might even be overlapping. Like I might have two entries that are different for shorts, and then I might have two of the same cover targets on those positions, and then I might have a third entry that's a little bit higher, a little bit lower. So I'll kind of depending on the setup, I'll kind of play around with them a little bit. But usually it's two or three in and out for me. And then for like if I'm trading in real time, again, depending on the setups, usually those are more kind of one shot in, because what I like to do is on those fantasy orders that I put out, if I'm trading in real time, if they hit, I see confirmation on that because I'm usually playing like a 4 or 5 to 1 risk reward setup. I have like they move quick. Like sometimes it's in a 1 minute bar. But like when I see that confirmation, maybe it's on like the level 2. If I see a big seller or whatever the situation is, then I'll have my hotkeys and I'll just dump a bunch more in and just short it and cover it like just with my hotkeys, and then my preset orders will just fill automatically, so I don't have to worry about them. And then there's other setups I do. They're all kind of similar plays where I'll usually do one entry and I'll have two exits. So like I'll have I'll have a little bit later in the day when things are kind of slowing down. If I'm trading real time, I have a certain setup that I look for where I'll go in one entry because it's really tight and it's usually like only a couple pennies risk like that I'm risking, and I'm looking to make like 10 or 15 cents kind of thing. So like I'll go into that just full size right at the top because it's such a tight window. I don't really like to range those ones, and then I'll usually exit in either one or two exits. So kind of depends on the setup, but I'd say most of the time, probably at least like 80% of the time, I'm going in and out at least twice, usually 3 times.
Actually, I think three is a pretty good number. I know, like when I trade, I look at it this way. I call it my early bird, my majority, and then my low ball. So my early bird is like where I think in the most optimistic of the bullish situation with this price turn, and then I put an order there, and then I put the bulk of my order where I think where it looks right. That's where you want it to pull back to, and then I have a low ball order, just like if it hits, it hits. If it doesn't, it doesn't, and then so we'll see
Yeah.
what happens. Yeah. But to your point though, it's you need to start off by looking at what your risk is in the first place, like how much you want
Mm.
to put on this play. Because I think so. I think we've said this before. Like the size of your bet should reflect the confidence you are in the trade, right? So the
Yeah.
trade I did on Wednesday, one of them was like $1,800. So it's like that reflected my confidence on it. Like I didn't, I wanted some money out of it, but I didn't want to put too much risk out there. So I think that's important too, to figure out like how confident are you in this trade? I think is important too. Like don't go all in on like a Hail Mary.
No. Yeah. Never hit that button unless you know what you're going to lose if it stops out on you.
Yeah, yeah. Sam, do you want to pull this up? I just thought this is interesting. I want to get your thoughts on it. So this guy posted an investor who invested $100 in the S&P 500 in 1960 and held their investment would now have 43,000 and change. The same investor, if they employed BTD, so buy the dip strategy of buying in 1960 and selling at all-time highs, waiting for a 10% correction, will have a portfolio of 434. So this sounds good on paper, and I understand the point that he's trying to get into in that, most people can't time the market. That's fair. But if you look at what he's actually saying there, the way he structured this problem, it's like obviously
Yeah.
because most things trend up, right? And so you're going to have significantly more all-time highs than you are going to get 10% correction. Like a 1% move from an all-time high is an all-time high. A
Yeah. I hate
10% correction is a significant thing, right?
I said as soon as I read that, I hated
Right.
it.
I'm looking at it, I'm like, of course, like, you know what I mean? So if you were to say, sell every 10% jump and buy every 10% dip, that changes the dynamics a little bit.
Okay, so let me put this in terms. You can let me know what you think about this, but let me put this in a little bit of a different layout to where it probably makes more sense for people who are investing. So if you're putting $100 in the S&P in 1960, then as you accumulate more money, you can put that in, but maybe leave a small percentage of it aside to buy those dips. So like basically what I'm saying is, let's say let's just use bigger numbers to make it a little bit easier. You have $10,000, you buy in the S&P today, and you're saving money because you have bills to pay or whatever. You're just leaving that $10,000, it's doing its thing, and you're saving money. You have another $10,000. Okay, well, since you bought that first chunk, maybe the S&P has just been going straight up. So maybe you buy, I don't know, maybe $8,000, maybe $8,500 worth of S&P on that ride up, and maybe just hold that $1,500 aside for if you get a big pullback, right? Like just kind of play with that like 10-15% cash to be able to buy and take advantage of those dips. But yeah, I mean, again, like if you're looking at if you're looking at something and you're thinking I'm going to hold this for 50 years, like we could be in a 5-year bear market and it doesn't matter. It's completely irrelevant. So that's kind of the only takeaway I would take from that is that if you're gonna wait and buy the dips, don't hold all your money and wait to buy the dips. Just keep buying into something that you're going to be holding for decades. That's fine. That's a great way to invest. And then hold a little bit of cash on the side just in case. Like a lot of funds do that. A lot of fund managers will do that where like depends, like if you talk to different funds, they'll tell you different things. Some guys keep 5% cash, some guys all the way up to 20, probably depending on the volatility of the fund or whatever. But it is something a lot of guys do because you don't want to be in a spot where the market does what it does in 2020 and you have no cash on hand and you got to sit there and just let that 100% gain or whatever it is go to waste. So you want to have a little bit on the side, but I think again, it comes back to time frame. If you're going to hold something for 50, 60, 70 years, just buy when you have the money to buy. Don't worry about getting in at the low. Don't worry about selling at the high. If it's an investment, it's an investment. It's not a trade.
Yeah. Like actually adding to that, I think Warren Buffett's up to like 160 billion in cash now. That's almost
Okay.
45% of in cash. That's almost 45% of his entire Berkshire portfolio.
Oh
And
wow.
yeah, and if you ask him, he just says it's because there's no deals. It's like I don't want to be 45% in cash. I'd love to put this to work, but there's just no deals.
Yeah. Yeah, that's true.
Right? Just imagine this. Now, I think he's completely missing technology, but the philosophy is right. You know, if you don't see a good opportunity for your money, just don't deploy it.
Yeah. Yeah, for sure. But again, this is an index. This is kind of one of those like safe house 8% per
Yeah,
year, whatever it is kind of things, right?
yeah,
So yeah,
yeah,
I think that's the biggest takeaway is that you want to be able to take advantage of the dips, but you don't want to wait because you might not get a dip for 10 years.
yeah. Like waiting for a dip is more like some high level traders. Like definitely not what you want to do as a beginner.
Yeah.
And like
And again,
I didn't. Sorry,
it
go ahead.
comes I was just gonna say, it always comes back to time frame, right? Like if you're trading something intraday, yeah, wait for the dip. If the dip doesn't come, you don't take the trade. If you're trading something over a week, yeah, probably wait for the dip. If you're trading something over a month, maybe buy some now and then save a little bit for the dip. If you're trading over 3 months, maybe buy most of it now and save 30% for the dip. If you're trading over 50 years, maybe buy pretty much all of it now and save 5% for if it dips, right? Like, I mean,
Yeah,
that's just my own opinion there, but
and like I also posted the other day when I did that like $1,800 trade. Like I was like I wanted to make the point that like I think a lot of people have the idea that you have to start off with like a big wad of cash, like it takes money to make money kind of thing. And I'm
mm,
like, yes, to an extent that's true, but I think you'll agree. What's more important is to look at the percentage gains,
yeah, yeah,
right? So it's
100%. I
like
mean, that's the easiest way to trade. Even if you're making a lot of money, I think it's a mentality thing. Like think about if you have $1 million account. I mean, do you want to set your risk at, $10,000 a day? Like looking at $10,000 kind of stings, but if you set it at, 1%, it's like, well, whatever.
yeah,
1% is 1%, right? I'm looking to risk 1%. I'm looking to make 1 or 2%. That's a lot easier to swallow than looking at that dollar figure. So that kind of
yeah,
gets worse. It kind of gets worse as you grow because if you have a $100 account, it's like, oh, okay, I'm gonna risk 1%, so I'm gonna risk a dollar. You lose a dollar. It's like, oh, whatever, it's a dollar. But then all of a sudden it's $100, and it's like, okay, it's $100. Then you get better, and then it's $1,000. It's like, oh, $1,000 kind of stings. So like if you're always thinking of it as percentage, it makes it a lot easier on the stomach.
yeah. And I think like I just wanted to point out so that not you have to get used to like being in the suck too, right? So I just wanted to show people my portfolio because like I think it helps when somebody can relate that they're not the only one going through some pain. So this is my RSP. This is one I've had for like 9 years. So it's in the last 3 months it's down 20%. Year to date it's down like 13%. And this is because I'm overweight Tesla. So basically whatever Tesla does, this portfolio is going to do.
So what you guys are actually looking at is a stock chart of Tesla, just so we're clear.
I have made conscious attempts since January to diversify. So I got some Nvidia in there too and some other things, but it's still overwhelmingly Tesla. And so this is why I'm down. But like the reason I'm not particularly freaked out is because I've gone through this before, but also because like when a stock is down, the only thing I do is to do more research. I just want to make sure the company's doing well. You know,
Mm,
they're expanding their factories and they're going to be doing your Cybertruck later in the year. Giga Berlin's coming out, right? And the Model S refresh, the Plaid's coming out. Actually, on June 3rd, they're going to have the first deliveries happening, right? So, like, fundamentally, the company's never been better. And so the stock price is a little bit divorced from the performance of the company right now. So that's why I'm not freaking out. It sucks maybe looking at the numbers, but it's kind of meaningless,
yeah.
right? So that's where I just wanted to say it's at. Like it's like, and then the other thing. So this is my TFSA. That's the one I started last April, and then this one's up significantly, but because I was trading the shit out of Galaxy,
Mm,
um, and this is actually a good lesson too. So it's up 63%, but it would be significantly lower if I didn't sell Galaxy. So Galaxy hit its all time high a few months ago, I think, or a few weeks ago. Sorry, it was like 40 something dollars, right? And I was selling on the way up from 30 to 40. and just something told me like don't get back into it. Like you sometimes you get attached to a stock that's been really good to you. I think you know what that is, right? And
It
like
does.
yeah, yeah, and like yeah, so Galaxy's been really great to me this year. But then I was looking at the charts and just like it's nothing that makes me think it's going to go higher, but a lot to make me think it's going to go lower. So I just didn't jump in. I just sat on the side with cash, and if I jumped in, like that number would be quite a bit uglier.
Mhm.
And so like yeah, I just wanted to mention those things real quick. So it's like emotional decisions could really put you in a different place really quickly.
Yeah. That's yeah, again, like I think I sound like a broken record now. It comes back to time frame again, right? Like if you're all that money that you put in there, you're putting in there for your retirement fund basically. So if it's down 12% or whatever, then it really doesn't matter. Like you're not gonna panic out of that for 3 months worth of selling.
Yeah, yeah. I just I don't should I mention the bet real quick? Because I think some people
Yeah, sure.
wondering. Oh, oh, that is. So Willie did end up giving me a congratulations. Um, like 2 days after. So we made the bet. Let me see if I have the file actually. But so we made the bet. Where did I put it? So we made the bet back in March, and it was Bitcoin was at $55,000, and we're saying that it won't. And he was saying that it won't go below 53,000 again. Well, so the original tweet that sparked my interest was that he said Bitcoin will not trade below $1 trillion valuation again, and that was 53,000 something ish. So that was the
Mhm.
original tweet, and then a lot of people jumped in on that tweet saying that I we disagree, and then this guy put up said I bet you a Bitcoin that you're wrong, and that guy never replied back. But then I jumped in and was like, I'll bet you half a Bitcoin that you're wrong. And then I went to sleep, and then he got back to me the next day, and he's like, "I'll take the bet," and I was kind of like, "Fuck."
I just wanted to confirm that this was after a night of drinking, I think, right?
Yeah, I was drunk when I saw the tweet. So that's also part of why I said fuck in the morning because I looked I literally ran to the desk, looked at my chart again. I was like, was I right? Like was I thinking straight? Like what was going on, right? But yeah, like the bet was that Bitcoin won't close below 44,600 on a daily candle. And prior to Wednesday's sell off, that was actually a really strong price because Bitcoin could easily go below that number, but to close below it is a bitch because Bitcoin, like you see it does, it'll pop like 10, 20, 50% like in hours, right?
Yeah.
Um, but yeah, anyway, I ended up being right and I got the Bitcoin back. But I think what was important was like uh, the Twitch. So he's got like 500,000 followers on Twitter, right?
Okay.
So I actually so when I won the bet, I actually didn't announce it or anything. Like I just kind of took the money. I didn't say anything, and I because I didn't want him to get shit on by Twitter
Yeah.
because they're vicious, right? But what ended up happening was a lot of people started commenting on the feed. They were like, it's actually pretty impressive that how the two of you handled it because it's like you had a disagreement. You didn't flame each other. You're just like let's just put our money where our mouth is, and then when it was over, like we're both pretty gracious about it, just like let's move on, right?
Mhm.
So I thought that was pretty cool. I thought it was pretty surprising to me. Like neither of us got well, I got flamed at the beginning, but nobody flamed anybody at the end though.
Yeah, that just gives them so much more credibility though. Like I like if people are going to admit when they're wrong or when they make a bad trade or something like that, like that just makes you respect them so much more because nobody's right all the time. So
Yeah.
if you're looking at some guy who's saying he's right and you're just getting mad about stuff like that, then what the hell kind of information is this guy spitting out, right?
Yeah, but I just wanted to because so after the bet, after I won the bet, I remembered something. He was on a podcast called "What Bitcoin Did." I want to say in April, late April, and then so the interviewer was asking him like, "Where do you see Bitcoin going?" And then do you fear a pullback? And if so, what range? And then Willie was saying that his models has a floor, and he says Bitcoin has never broken that floor. But what happened was right as he said that, he's like, now that I said that, I bet you traders going to try to break me. I remember, I remember him saying that, and then I was like, oh, did he just jinx himself? And sure
Yeah.
enough, like a month later, like models are meant to be broken, I guess.
Yeah. I don't think any. I mean, nothing's perfect in the stock market, man.
I feel like that's the thing. It's like we were saying earlier. I think once everybody's eyeballs are on a specific number, what you thought was going to happen is likely not going to happen.
Yeah, for sure. Yeah. All right.
Anyway,
Well,
I think we should wrap it up, guys.
cool.
It's a great episode. All right, YouTubers. Like we've seen, like message us with your questions because I know there's some stuff that you might be wondering that we haven't touched on. Like today's episode, the stuff that I brought up was mostly stuff that I was being asked personally, so I thought I'll share on the podcast. And so, like, yeah, feel free to send us your messages. All right, take care.
Thanks, guys.